It's Bob Anderson, and it is June 14th, 2023. I'm going to give you an update on my RTY and CL, two separate evaluations with Apex. Those are two separate evaluations that I'm running, 25K evaluations. So the minimums on each is, if you remember, is a $15,000 profit and minimum 7 days trading. And so where I sit as of today, I'm looking at it here. I posted it on the front of this video, but is $848 in the RTY. I have not traded that in 2 days. And $671 in the CL, which I'm on day 4. I traded it 4 days. So I'm still, I mean, in all, I'm fully, my trailing stop is $1,500 behind in both cases. So that's good. But so that means I'm hitting my targets at the end, but I'm behind on, I mean, in terms of days. I mean, technically I could be done in 7 days, but that's not going to happen. I mean, I'm $700 away in the RTY, and I'm like $800 away in the CL. I just don't see that happening. And well, I don't see it happening in RTY in 2 days, but it doesn't matter. The objective is for me to get there. And the other thing is we're in the summer, so the 5-minute gold line, 1-minute gold line, all those trades are just not setting up as much. They're not crossing over. Things are just not moving as much. And of course, today we had FOMC day. I took 0 trades in the RTY because of that, and probably was a smart thing. What I'm going to do is I'm going to walk you through the video. I'm going to walk you through the last 2 days of the CL. I'm going to show you trades that I was looking for, trades that I didn't take, and why I didn't take them, and what makes a 5-minute gold line trade valid and what makes a 5-minute gold line trade not valid when you're looking at these things. And remember this, folks, okay? This is what's important. This is probably the most important part. So if you're trading, like, say, 2 contracts, and you're trading oil, and you sit here and you wait patiently for that one trade that sets up and you hit it, and it goes, it's 20 ticks that you're looking for, that's $400, okay? That's $400. So you know, again, you don't, it's not the quantity of trades, it's the quality of trades, okay? I cannot stress that enough, And you've got to slow walk these things to get through evaluations, especially in the summertime. And then to take those evaluations and turn them into, you know, bank checking accounts for you, where you PA funding it. I did have a subscriber email me tonight and tell me she just passed another evaluation a couple days ago. That's great. I'm just excited. So let me just show you what we got here, okay? So here is oil, all right? And this is 2 days ago. So this was today. This would be Tuesday the 13th, okay? So oil, let's talk about 5-minute gold line, okay? So this is the 5-minute gold line. Remember, this is a 1-minute chart, and this is a 9 EMA off 5-minute data. This is a 21 SMA off 5-minute data. I'm going to show you something very interesting about this SMA a little bit later. And they're all run off of 1 minute. They're on a 1-minute chart because we want 1-minute candles so we can get in closer to the pivot. All right? To the pivot point. So, let's talk about this. Price resets because it's below the gold line, crosses over, and normally we're looking for a recent pivot high and a pullback to our 5-minute gold line. I mean, look at that. I mean, this is a daily high right here. So you look to your left, You don't have to look to your left when you hit the daily high because there's nothing within an hour of you. And this pullback. I was so excited. Oh my God, I can't even begin to tell you how excited I was about this trade setting up. And then the darn thing never pierced my 5-minute gold line. So off it went. Now in my alternate accounts, which are not this evaluation challenge, I marked this. I took this trade here. I took the break. I took the second break of the open range break box, and boy, boof, off it went. And I got $500. But this never pierced here. Okay? Never. Unfortunately. So I didn't catch that trade. Remember, this was Tuesday. So off we go. We keep creating new highs, which is cool. We kind of like that. You know, again, our 5-minute 9 EMA is following up. So we just keep following. Now, this is interesting right here. I'm going to show this to you, so I'm going to keep pulling this over. Dang, I hate the way that gold line just takes forever. All right, so see this? This was a pullback here. My guess is this is off of the 1-minute gold line. That would be my guess. My guess is this is the 1-minute gold line. Matter of fact, just for fun, let's check. Where is that 9-minute? Let's make it visual. Oh yeah, right there. Boink. There's your 1 minute. Off it goes. All right, so what happened is you created a pivot here. This is your daily high right here at that time. And you didn't get a pullback to here, but instead it pulled back into your 1 minute and it rolled back up again. So now you have a new daily high as you pull back, but in the process, this line that I drew here at the bottom of this pivot, because we created a new high, is my pivot that I can't break on the pullback. And look what happened when we broke it. See, that's what's keeping you out of the bad trades, is recognizing this pivot created a new high, or, you know, new recent high even. It doesn't have to be a new high, but it just needs to be a new recent high versus the high here. And when you pulled back price, it broke it. So I drew this line on here to see, because what I wanted is I wanted this gold line to come up, this gold line right here to come up. For conversational purposes, we'll go back to getting rid of this one. Okay. We'll just go back to getting rid of this one. I just wanted to confirm that. All right. So we want, come on, man. We wanted this gold line to come up through here and keep this pullback from being lower than this, and then take the long. But it just didn't set up. I mean, it broke, and once it broke it, it rolled it over. So let's just keep going, see what's going on here. So now we had a reset because price was below this gold line all the way, this whole candle, a reset, and it rolled up. Okay, but here's the problem. This pivot high before the pullback at 10:30 and this one at 10:07 are only 23 minutes apart. This did not break this. So this pullback is not going to create the kind of pullback I'm looking for an entry. I need this pivot to be higher than this, since this is less than an hour ago. Okay? So if this had pierced up and then pulled back to this gold line, then I'd be looking for this trade. But because this did not break this pivot, I'm not looking for this trade. I mean, if you try to take this strategy seriously that I'm talking about, it becomes real easy. If you're focused on trading, you could actually manage probably 4 different screens at a time, because once this doesn't break this, okay, you're no longer concerned about this one anymore. Let's go look at the ES. You see what I'm saying? So you don't have to you don't have to be fixated on the chart. Okay, this did not break this. This is coming back, so who cares? Go on to something else. All right, and then so what happened? It just kind of sat along that thing, and then bam. All right. So here it's 10:59. Okay, let's look at this over here onto the right. I know I don't want to show everything without, whatever. But anyways, here's 10:59. So now we got a test of the red line. Okay. We haven't been at this red line since 8:51 a.m. Okay. By the way, the red line worked beautifully at 8:51. Holy cow. Pullback, boom, gone. Jesus. Look at all that money you would have made there. Hee-haw. Anyways, so let's see what happens. So here's your long right here. 61.58, I think. Let's blow it up. Let's blow it up and look. 61.57. There's your long. 57. So your target is 77. Oh, yeah. Yeah, your target is 77. Look at that thing spike up to 75. Holy cow. And then rolled over. And bam. So you would have been knocked out at worst even. But it missed your target by 2 ticks. I mean, can you be more frustrated than that? You hit this trade absolutely perfectly. And by the way, this is confirmation that there's other traders looking for the same thing. This comes down to this 21 SMA and bam. I mean, that's a long move right there. It just didn't hit your target. Notice this top is higher than this top, is higher than this top, is higher than this top. That is a bad trend. That means we're rolling over. And what did we do? Broke this pivot here, rolled back up into these lines, and then bam, down we went. Okay, so the signs are right there on the chart. We're going to roll over. I mean, you can just bing, 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 bing. Each pivot point is lower than the previous one. Then what happens is price crosses the red line, comes back up, crosses the red line again with authority, breaks this pivot, rolls up into the gold line, bam, down it goes. Now, am I looking for this trade with this strategy? No, I'm not. Because this pivot low right here is at 1110, and this is at 1022. So we have lower pivots than we do over here. So I'm not looking for shorts yet till we break this. All right. So there we go. Right here goes back up into the gold line, boom, back up into the gold line, boom. I mean, you can see the gold line's working. And I'm not saying you can't take those trades, but I just try to stay in the same rules. Okay, so let's talk about that rule. So here we are at 1022, right? Here's 1022. So once we get past 1122, which is right here, then we can take this trade right here. Okay, it's just because now this pivot's no longer relevant once we're over an hour. And boom, 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 boom. I mean, so these trades became valid here. This one was not if you follow my rules strictly, okay? So now let's talk how to avoid a bad trade. So then we run down and we create a pivot low, and then we roll up. But then we roll over and create another pivot low from this pivot. And then guess what happens? Price comes up. And again, I created that line just like I did over here. Remember this line? The pivot that created a new high? That's our break point. Well, the pivot that created a new low, bam, bam. The trade actually probably worked. I'm trying to think here. 26. 19 ticks. That's pretty funny. It went to 19 ticks. This didn't work. This did not create a new pivot low. So when this rolled up, I'm not looking at it. This didn't create a new pivot low. So when it rolled up, I'm not looking at it. See how easy it is to just discount trades? This did not break this. So this roll up is not relevant anymore. See how when this one rolled down, this pivot here broke this one here. So when this one rolled up, this is valid. You get that? This broke this one. So this pullback and rollover makes this one valid. This one here was not broken by this one here, so when it rolled up, it's not valid because it's showing signs that it's going to rotate. And that's exactly what it did. And then, and then you get over here to your red line. Now, is your red line short going to work? Well, let's look. Well, no. So here's interesting. Let's look at this for just a second. Now, this is after 12 o'clock or whatever. But see how this rolled up into your red line? And you're looking to break the red line short. You never got falsely pulled into that trade and it rolled up. Okay? So this is Tuesday. So again, highlight. This trade was missed by a tick. This trade was not valid because it broke this pivot. This, in my book, is not valid. I know it looks great on paper, but it didn't break this pivot here. This, when it finally pulled up, broke this pivot, became valid. I mean, this pivot was no longer valid because it was over an hour. This one broke this pivot here, rolled up, boom. There you go. So, this one, you broke this pivot here to this, so it's no longer valid. Now, the darn thing actually worked, technically. This one did not break this one, so this is not valid. Okay? So let's go to today. Let's go to today. Where is today? Oh, I was going to show you guys this. Here's a crossover. So here's a crossover. It's after 1 o'clock again. Now, I don't mind looking at these trades after 1 o'clock. It's right in that 12 to 1 time frame where things just get dead. And you can see it right here. Here's 12, and here's 12:40. And all of a sudden, the market starts coming back to life, and here's 1 o'clock. This pullback, this is the crossover, first touch of your gold line, and it just missed it. But again, I talked about this in my live earlier today. It just did not hit right here. And then when it broke, it went, it went, but it did not hit. It did not pull back enough to trigger. Anyways, let's go to today. So let me get over here and look for today so I can show you the trade I took. Now today is oil inventory day. So what does that mean to me? Well, it means that this is going to be a bunch of garbage until we get past 10:30. Now, does this look like a bunch of garbage to you? Sure looks like a bunch of garbage to me. Here's 9. Here's 9:15, which is your open range, that kind of stuff. Anyways, you had a fake false break long. It clicked through by a tick, which means when it rolls the other side, that's going to work. By the way, just so you know, when you have a false break one side and then price finally rolls over, that other side is going to work, which by the way, it did. 06 is the entry, 86 is your out. I didn't take that trade because it's not part of this strategy. So let's keep going. So now let's get to 10:30. Here's oil inventory right here. Oil inventory happens at 10:30. Look at the candles. Big candles down, big candles up, big candles down. And then we just started to relax a little, and price goes back up into that gold line. So we created a pivot low. This is the overnight open here, which, by the way, the overnight open held beautifully. And then we had a pull up, no break, no break, no break, no break, no break, and then a break. And that was my entry. That was my entry today. Yeah, that was my entry today. And down it went. That was beautiful. I mean, by the way, this gold line is pulled down. It wasn't that far down, just so you know. Remember, this thing continued to move, and as this price came down, the gold line dropped. But this gold line was further up at the time. But anyways, my entry was 69.88, and down she went. Right back to the overnight open again, which the overnight open held again, rolled up into the gold line, bam. Now, this is not a trade, just so you know, because we're too close. This is literally right at the cut line. You're in at 56, so honestly, your target is 36. It worked. I didn't take it for that reason. But 56, if you took the entry at 56, you got out at 36, which is right before the overnight open. So it was valid because we went to it was valid in this respect. It went to a new pivot low from this pivot, roll back to your gold line, bam, there you go. This did not create a new pivot low, rolled up, rolled down. Again, and then down oil went, down oil went, down oil went. So here we go. We did not create a new pivot low from this pull up here. And we broke that pivot there, so nothing's valid here. And then we got into this hodgepodge where now we're stuck between the 5-minute 21 SMA and the overnight open. So there's just nothing to look at here. Yeah. And that's it. So let's talk about the RTY. All right. I did not even take a trade in the RTY for the last 2 days. But I thought I'd show you some observations. Ironically, this was 2 days ago, so this was June 13th. Also, we did not, same thing with oil. We did not pierce. And this is odd because this is not the same time as oil. This is not the same time as oil. This is 30 minutes later. This spot right here is 30 minutes later than when this happened in oil. Okay? This is literally 30 minutes almost to the minute later. This did not pierce that 5-minute gold line. Is that not crazy? On the same damn day. 30 minutes later. Anyways, so you had a fake break in the RTY, rolls down, and it runs up. And what happens on the second breaks that I tell you guys? Oh, yeah, the trade works. Well, I didn't take it, but bam. I mean, it went. Now, just to give you an idea how quickly this stuff goes. Okay, this went. Your entry is 18.13. Okay. This is 22.3 right here, which is 40 ticks. That's 40 ticks right there. That's 40 ticks. Not 20. That's 40 right there in one candle. 40 ticks. Anyways, so let's talk about why I didn't take this trade. Okay, so we had a recent pivot high, pull down, and then a roll up, and we matched the heights over here literally by a tick from this new high, and then rolled over. So I had a line here, and this thing came back to that gold line, and damn if that freaking thing didn't work. I didn't take it. But I saw it setting up, and I saw the break of this pivot back into this gold line, and I was like, man, I don't know. So let me show you what I mean by I don't know. So you roll up, you create a new pivot high, you come back down, you didn't hit this, and you pivoted back up again in a pretty solid move. I mean, we're talking about 19.8 to 25. I mean, you're talking 50, 40 plus ticks. And then it rolled over, and I was like, nope, forget it, because it broke this pivot here. And that's exactly what it ended up doing then, consolidating and rolling over. This is a trade that you could have taken off the red line and it would have failed. This is probably, I mean, I shouldn't say probably. This is a valid entry here, long on the red line, and that one failed. That one failed. Okay? Now, I'm going to show you something interesting about the red line. So this rolls up and then rolls down and fails. Now watch, just so you don't, if you just didn't realize how powerful that 21 SMA is, let me show you how powerful that 21 SMA is right here. Okay? Let's just spend a minute looking at this. So here's price. Here's price over here. Staying north of it. Down north of it. Breaks through it. Now it's south of it. South of it. Then rolls over north of it. North of it. And then you get to the end of the day when the market closes. I mean, there's this 21 SMA is a directional trade, and it shows you that right there. I mean, it just can't get any clearer than that. I mean, you could literally trade this line all by itself. It's just the more you work your way back. I'm not even going to talk about today in the RTY. There's no sense in it. It was FOMC day. But the more you work your way back on those moving averages, like that one there, which is the 21 SMA on the 5-minute, it's a beautiful line, and it shows you what the market, it is that line in the sand of what the market's trying to do. Because you can see when it crosses over that red line, it's like price just go, because now they're going another direction. Now they're going south of the 5-minute red line, or they're going north of the 5-minute red line. And anyway, so you can see the power of that line. And to trade it, but here's the problem with it. To trade it, you got to be patient. You got to wait till after 11 o'clock. And you've got to be willing to sit there and wait until it finally does touch. You know, the intent of that 5-minute gold line is to be touched a lot less than, 5-minute red line is to be touched a lot less than that 5-minute gold line. And the intent of that 5-minute gold line is to be touched less than that 1-minute gold line. So if you're a patient person and you are truly a killer trader that has the patience and the discipline, then you can trade that darn thing and make bigger swings. Here's the problem with it. With evaluations, though, which this is what we're trading is evaluations, and then you got to get to funded status, you really need a lot of singles and doubles, because you can't have that trailing stop catching up to you. So my point is, if you're going to trade the 5-minute red line and you're going to trade it, say, for 50 tick wins, or depending on the instrument, that's great. But the problem is, you can't have like 50 ticks in the ES and it goes 49 and then it rolls all the way back and knocks you out of even. You just can't afford that when you have a trailing stop coming behind you. But once you're funded and there's no longer that trailing stop, then you can do that. You can literally adapt your strategy to your financial condition of your evaluation accounts. And but I'm a big advocate of the trades I talk about, the 1 minute gold line and the 5 minute gold line, because those are your single doubles that you need to get through the evaluation and to get through the funded process, the PA account, to where you're past the drawdowns. Anyways, I hope this was helpful to you guys. Down below, I got some information about how to do the 5 minute gold line on the 1 minute chart again. And I will talk to you guys later. And hopefully I will finally get these accounts funded. I was hoping to do it by Friday, but I don't think I'm going to get there. Talk to you later. Bye.